Good afternoon and welcome to the FX Daily Roundup here with ForexAnalytix. And we're seeing the euro sliding right back down to the lows. We've been talking about this about the last couple of days, how bears are simply selling this with impunity. But what knocked the euro down earlier this morning, and then also it subsequently popped up, was that Lagarde had come in saying that there's more room to cut rates if needed. Although this may pose a financial stability risk, she added that they would have a review of how monetary policy is conducted and was it warranted. Well, that's just basically like saying, well, I'll speed, but I'll be careful while I'm speeding. I'm saying the market just went with the line, then it bounced right back up. Oh, well, they're going to look at the policy. Well, wait, she already mentioned it. And the thing is that this is what's been knocking the euro every time Lagarde talks. It knocks the euro down. We saw this even, what was it, a couple of weeks back when it was trying to make its first big move. I think it was here. And then Lagarde was speaking and came in and said, well, that was when they selected Lagarde to be the new ECB chief. And that knocked the stuffing out of the euro. And from there, we just kept sliding and sliding. And you can see here where it just has been relentless. And so every time something comes up like this, it just falls. And so I was talking to, chatting in the chat room about, we were talking about, talking with the trader, we were talking about correlations between oil and the dollar CAD. And I was saying that, those correlations come and go. Sometimes we see them as low as 68%, sometimes as high as 92%. Why sometimes people would like to trade the dollar, well, the CAD as a proxy, for oil. As it's a significant export for the economy. But that being said, my point is that when you identify when the correlation is in sync, then you just ride that pony till it won't ride no more. And that's what you're seeing here with the euro. Every time the name Lagarde comes up, wham, the euro gets knocked back. You know what I mean? So the same thing when bond rates were going higher, but we got that double whammy. I think back in here was when bond rates were already moving to lower lows at the time, new records, and then the euro barely caught its breath, and then wham, the announcement that Lagarde was going to be the ECB chief. Well, Lagarde goes and announces, okay, well, we can still do more action, and then it knocks the euro lower, although we're into our bias chart support here that we've had today, actually since yesterday, 1053. And then we saw a bounce back because she says, okay, well, we'll have to have a review about that. Look, if you have to mention it, then that's it. It doesn't matter if you're going to say, well, we'll think about it though first. No, if you mentioned it, it means you're going to do it. It's simply that's it. So I've been saying this, the other day, because last week I picked this thing up on I thought a value bind. It kept going lower and lower. Fortunately, we saw that pop late on Friday, and I was able to, come out with a few nickels. But my point is, I was saying, about this, there's a reason why this currency is so doggone low and, has been going, south or below the basement since Moses crossed the desert. And I was, at the time, I was maybe a little bit of a frustration at the time saying it's just a junk currency. It's a failed plan. I mean, it's not going to get any better, folks. I mean, Germany is just about locked in the recession for two quarters of negative growth. I mean, there's nothing that you can look at this economy, this Eurozone area that you can hang your hat on. I mean, the funny thing is, to a certain extent, France is the one that's actually performing better than everybody else, including Germany, which is actually performing the worst. And even Italy, of all countries, its economic statistics have been way far better. Well, let's put it this way. Everybody's been way far better than Germany. So Germany continues to struggle. As I said yesterday, it's the old adage, the old thing saying, I've fallen and I can't get up. So there's no reason. I mean, to be quite honest with you, I'm surprised the euro's been able to hold here. We talked about this in Sunday. I was really surprised. I thought when the euro gained and we saw these big pops against everybody else, we barely just went up on Sunday night session about 15 pips, and then we just started sliding down. And you can see it's just been relentless. And then that's what I was telling you was that, the bears, we talked about the significance of 1160, and we talked about this yesterday. Look, at this point, if we were to rally back there, the bears would just love it. It'd just be more, you just get to, it's like having a second Christmas in August. You see what I'm saying? Because there's nothing that's changed on this euro. You know, every time somebody thinks it's going to change around, I've been one of them too. You know, it falls right back on its face. Okay, now we're going to rally. I mean, we had the perfect opportunity on Friday. Powell giving the, you know, saying, hey, you know, they are open to more cuts. What really kicked it off was Trump, you know, saying, hey, he's got something, essentially saying, you know, essentially saying he had something up his sleeve. Thought folks might thought there might have been something he might do with the dollar, and we rallied up. But look, here we are, right back down again. My concerns are we break here. You know, there is some additional support, some big support at the. I think it's, Blake had mentioned it himself. I think it's at the 1020. We can take a look at that. But it just seems like this thing really wants to go lower, and we're going to go and take a look here. So right here, you see there, that is, that's actually 110, so 109.98, so 110. But you can see this band right there. Here, support comes in right there, coming in at 110. It can quickly just fall apart. And I mean, it could quickly get down here. Do you see that? 803. See that coming across here? 803, and potentially is where this market may end up going to. Let me go on in. And I've had a lot of people talking about this market getting to 108. And you can see it right there. See 797, 108. Going in. I like that because I think that'd be a pretty big key area. And, you know, here's the problem is that when we look at this thing in context, you know, we're thinking, okay, I've been guilty of that. Okay, well, it's got to pop. It's got to pop. It's got to pop. Well, how many times we've been saying it's got to pop, and it doesn't pop. You know what I mean? But, you know, if we do break lower, then everybody's going to say, for good reason, wow, it was pretty obvious. Can you see how it couldn't pop and it just kept going? See how it just kept hugging the lows and it couldn't get any lower? I mean, all we were going to do is just go and roll right over. And you could probably take this extension. Let's take a look at this. So it looks like if we do go in and break down past 1027, first target would be 966, and then the 161% would come in at 108.88 if you take this most recent range here. But I mean, like I said, you've got so many factors. Not only technically is it poor, but then you look at the fundamentals as far as economic activity. Germany, the once engine of the entire Eurozone, is completely in the dirt. I mean, completely in the dirt. And then you look at Lagarde. She comes in as ECB chief. She's just basically going to rubber stamp what Draghi's been doing. And then she just told you today, hey, we're open to more lower rates. So, I mean, it's just like ignoring what's staring us right in front of our face. Now, like I said, I'm not saying, and I said that a couple of days ago, I'm not saying you have to rush in and sell this thing. But like I said, any rallies, they're just going to sell into it until this thing proves itself different. But anyway, enough of that. So we today, the bias chart resistance we had was for the dollar yen was 643. We got there, but I was telling the folks in the chat room, specifically Biersman, hey, just wait, let them gun the stops. I think we can push a little bit higher here because, as you know, let's go move in here. Look at those SPOOs. They're on the highs. Now, we know that the dollar yen, and you can see here gold moving lower. Watch out for that 1527 here. I was short yesterday, made a couple of nickels, and then I had my stop here at 43 3/4. I got knocked down. I didn't get back in. I've just been doing some preparatory work as we get into the next, when everything comes back. So I'm not trying to throw any money away, trying to exercise some prudence. But there have been some good moves here. But you can see here, the silver, you get this this tweezer top right here on the 30-minute. When it's rolled over, I haven't traded silver in a coon's age. So I haven't done anything, but I've used it kind of like as a complementary market for the gold to see what's happening. Obviously, you can see silver and it's allowing this gold to go in and break lower. But getting back to the main page here, so I was saying is, hey, look, just wait. I think we can squeeze these, hit some stops a little bit further. So here was a 43. You can see the pink line there. And I told you I like to use these because That way, if I'm looking across the board and go, whoa, you know, this is happening, the cable's right there, and I can quickly see that. So that's why I try and keep either the day's bias chart resistance / support, or a key particular level that I'm looking at in case the market breaks above on the pink lines. That you can see here, it allows it to stand out very, very quickly and easily for me. Now that being said, let's go and take a look at here on the cash dollar index. Man, we're at a key level here. Look at this on a daily close here. If we get above this daily close, that's really going to open it up for us to move much higher. You know, here's the thing is, the dollar had every reason to get knocked out of the block from last week, and here we are pushing even higher. Well, the euro, as I've told you before, comprises 56.4% of the cash dollar index. So the dollar index is just being forced up. And one of the things that we referenced yesterday was, you know, there was a story, it was talking about the yields and how everything's gone negative. And it said the U.S. used to be the best house in a bad neighborhood. Now it's the only house in the neighborhood. And that because everything else has gone negative. So the dollar's going to have that undertone bid. If you want to have, you know, I think it's crazy with some of these negative rates. You're basically going to pay the bank money to hold your money, okay, which is pretty nutty. But that being said, there is a potential for further appreciation in these bonds, and that's why they continue to maintain their bid, whether it's boons or I know right now Italian yields are really zooming right now, or zooming. I mean, as far as the prices, they're showing here that now that the populist leader is out the door, they're really buying into that Italian paper right now. That being said, you're finding more and more and more reasons for this year to go lower. Now, like I said, eventually you get a pop, but every time you get a pop, they quickly sell into it. So it's not going to change until, and I want to get back into this again with the euro. Look, the only way that this euro dollar is going to scare any bears, we're going to have to get a daily close above 1220, right here at 1227. If you look at the daily, you can look at 1213, but really this 1227. Until you get a close above that, that's when you're going to have some concerned looks on the bears. Other than that, any rally back, they're just going to keep selling it until it proves different. And right now, you're not seeing anything. They talk about the best trades are the ones where you combine fundamentals and technicals. Well, you look at the fundamentals. Germany's in the dirt, and Eurozone has all kinds of problems, obviously partially linked to the whole issue with China, the whole trade issue. Then it's got also with the potential for Brexit, okay? Then you've got bond rates going to new all-time lows. And now you just have Lagarde tell you they can go, they can do some more as far as the rates. So, I mean, it's like, you walk outside the door, it's not only, cloudy, it's thundering, it unleashes a downpour, and you're like, oh, I think it's going to change. I mean, I think the weather's going to change. Well, eventually it's going to change, but, when does eventually come? So that's what I'm saying is that, it looks like the potential is for this year to break. And if it breaks, I think it's going to be a fast road to move low, and you got to be careful here. I myself wouldn't be picking it up. I just won't. I mean, maybe it's because of recency bias, because I did go and pick it up, as I mentioned to you last week. So maybe take that with a grain of salt. I picked it up, which I thought was a fantastic, great value, and this sucker just kept going lower and lower and lower. And to be quite honest with you, despite what Powell said, it was actually Trump with this. He's got something up his sleeve, to paraphrase, that actually saved me and allowed me to make a few nickels by the end of the week on this trade. So that's what we got to take on that. I just want to once again emphasize, because there is specific news as to why this year just got knocked down again. We did see the peso move up higher, coming to this area. We've pulled back, found some support here. Right here, we were talking about in the chat room, the 2005. And I know Blake picked it up. A couple guys also picked it up there. And we saw a decent little bounce here. Dollar yen is still pushing a little bit hard. And I think with the screws, we can push higher here. How much higher? I don't know. I mean, the dollar yen has been beaten up so much. And that's good resistance, a good, technical resistance here with the 643. But the thing is that we've been pressed for so long that if you do blow those stops, we can quickly pop. Personally, I wouldn't want to touch this thing until we got to 674, and I think we could even blast beyond that with these S&Ps if they keep pushing higher. Let the market, kind of let you know when it wants to go. I think that we worked so much in here that we could potentially, maybe even on a short-term basis, if you look at this, watch this rally to this pullback, which isn't much, and that takes you to 690. Okay, fine. I'll take a look at it at 690. I'm happy looking at it at 690. You see what I'm saying? That would take out the stops of the 674, and we know about the 709, so that wouldn't be a bad area, and that'd be the 161% of this most recent move. You see that? But let's go on pair back in here. This dollar index, come on, look at that. It's just continues. And look at the euro on its lows right now. So look at that gold. Oh my God, we just got down to 1529. I did post in the room, watch the 1527. That was actually the area that I was going to cover my second half of my short, which I didn't jump back into it. Hang on a moment. That was my bad. Hang on. Okay, now here's the key thing with silver. If we get a 30-minute close below 1812, new shorts are going to start getting put into this thing. But we have to get a 30-minute close below 1812. A lot of people are looking, because silver's had such a huge move, probably don't want to hear anything about a 30-minute chart. I'm more interested to see what this thing would do with the daily. Bear with me. I don't know where this thing's acting up. I don't know what's going on with that. Okay. But we'll go to the main page and we'll put the silver in there. So bear with me a minute. Okay, you can see euro here on its lows. Let's go and take a look here with the silver. I might be having a problem with my trading view here. Yep, looks like something. I'm not sure what's going on with trading view, at least from mine. But I'm looking at 527 on the gold. Look at that 1812 on the silver. And let's see, other than that, that's about it. Just be careful. Look at the dollar yen still pressing up here. Like I said, 690 would be 161% extension of the most recent range. That's all we have for today. Thanks for joining us here on the FX Daily Roundup.